And here we are again. When we think we know what's going on in the energy business, when we think we know what crude oil is going to do, what happens? Yes, crude goes down on bullish news. How does that happen? What makes it do that? Brian and Bill here to let you know that things are not always as they seem. And so today we'll be talking about the crazy crude oil pricing.
Welcome in, everybody. Hey, listen, Bill, thank you for your theatrical introduction. So today we're actually going to talk about how oil prices fell on bullish news. There was talk over the weekend, and depending on when you're watching this, we are recording this in late August 2026, and there was news coming out of the U.S. that there was going to be tougher sanctions on Iran. Iran actually countered that and said, well, if you do that, then we're going to escalate. All of this points to more restrictions, less crude oil, not more crude oil. And so the expectation was that oil prices would rise, not drop. However, what we saw is oil prices drop. So that leaves people that buy oil, sell oil, trade oil, or use oil in part of their business confused as to why. So we're actually going to cover the why and give you a repeatable framework so that you can actually build this into your system so that you can understand how to disaggregate a headline versus what is reality and what is really happening. Because Bill has a great term for that. What is that? What is that term, Bill?
Headline fundamentals.
Headline fundamentals. And that's kind of what we're talking about. And essentially, if depending on you when you're watching this, and we're recording this in late August, you might be watching this down the way, but the system and the process is the same. There is a headline every single day that moves these markets. And so what we had is last week, we were above 85.94, pushing above, actually attempting to close a gap up to $90. And then what happened? We're going to be tough on sanctions. Iran says, well, if you do that, then we're going to increase escalation. What happened was a straight fall down of about $5 to $6 a barrel. I mean, what is that? About 7% loss today, for instance. We're down 3%. So what we're going to do is we're actually going to digest this as a case study in real time. And we're going to talk about why markets sometimes move, in our opinion, the wrong way.
Right. That is a producer perspective.
That is a producer perspective, but you could invert it. It could be a bearish headline and a bullish response. Is
right.
We're going to see this all the time where the market moves a little bit differently. So what is the setup? What actually happened over the weekend, Bill? Tell me what happened.
Well, we always say we're talking about peace, but this time we talked about escalation. So you would think that the prices would go up. And now we decided we're going to get more tough sanctions on Iran. And Brian and I had this discussion. When you've got them pretty tough already, how much more can you take? And we're going to talk about that in just a second.
Mm-hmm. Yeah, but essentially, the expectation was that oil should move higher. The headline was bullish. However, we had a very bearish response. That seems backwards, right? But the markets do not trade the headlines alone. There's actually a system. And if you want to learn more about the system, there is actually a free ebook that tells you our rogue method about how we dissect the markets on energy commodities. So it is totally free. There's a link down below. But I want to read this last line. They trade expectations, positioning, fundamentals, and confirmation. Those are the things that happen in addition to the headlines. So let's take the current example. The headline. The headline comes out, we're going to have tough sanctions. That translates to lower oil output. less sign of peace, which means longer supply disruption. More sanctions should, quote unquote, mean tighter supply. So, why did price fall? That's what we're trying to figure out. First lesson is the headline can be bullish, but the trade can already be crowded. Okay. We actually start with the headline. Let's actually keep track of this. The headline, tough on sanctions. That's a bullish headline, right, Bill? I mean, the
Yes, that should be meaning that the
bullish
oil is scarcer.
headline. All right. Now the expectations is what did the traders expect? They expected some de-risking, and what that likely means is that should also be bullish, right?
Right.
That's kind of where we went into the weekend. That's part of the reason we were at $86 is because traders already believed that. They already believed there was going to be escalation, that there wasn't a path out. Peace talks have eventually dissolved, haven't they? I mean,
Yeah. Well, there's sort of a faux thing anyway. So
yeah. Well, and dissecting that because we're dissecting sentiment, what is being said and negotiated. Negotiated is the story. But if traders bought the story last week, okay, think about this. If the traders bought the story last week, they may sell when the headline finally arrives. That is not always bearish. Let's take a look at what last week kind of built up to. So last week, we went, we started the week down here at 81 and we built up all week, right? So if traders were buying in during the week and that headline, there's some potential for a monetization. So how do you know if the traders um, bought the headline last week or where they stood? This is where we take a look at the rogue confirmation stack. These are the 5 questions that we actually ask. What does the headline imply? Well, the headline implies tough on sanctions, bullish.
right.
Expectation, de-risking, that's bullish. Was it already what was already priced in? This is where we get back to, well, depending on early August, there could have been traders that actually bought in this range, and then a second group of traders that bought in this range, right?
Right.
So the
Right.
trade down here, they're they're still in the money, but they're losing some value there. So was it already priced in? How was the market positioned? Okay, that's important. Then we step to what does the physical fundamentals say? And did the price confirmation confirm or reject the thesis? The signal, the headline, tougher. Tougher on sanctions implies tighter crude supply. Expectations, the markets move on surprise. This was not really a surprise, but over the weekend,
Right.
what we had to dissect is the positioning. This is where we actually use Rogue Radar, which is our tool, which you can get access to 14 days free. There's a link down below. This is something we built to create and track the market narrative. We cover the market narrative, which is what are all the articles saying? What are we saying? These are my opinions with my price levels. What do the technicals tell us? What do the fundamentals tell us for natural gas and crude oil? And then we can actually get geeky in here. And Bill and I were just talking about it. Cushing stocks. It's not relevant to today's conversation, but we were talking about it. Well, how does that compare to last week, last year, and a 3-year average? That gives us a quick view into are we in a bullish sentiment or a bearish sentiment? And we also have these nice color coded that tells you whether it is bullish or bearish. Everything is color coded so that you can actually see that. But
And one of
down
the reasons
here,
I was looking at, we were talking about Cushing stocks, was Cushing has a capacity of about 68 to 70 million barrels of storage, and they're
mm,
currently at 21 million barrels.
so they're getting low to some operational minimums,
Yes, some of
maybe.
these, in fact, is I bet some of the tanks are shut in.
Yeah. Yeah.
Probably half of them, to be honest with you.
But what we look at now on signal 3, which is the positioning, okay, what it is. And before when Friday's commitment of traders dropped, we actually analyzed and assessed all of the financial trades that were out there on NYMEX, and we determined this was a crowded long, a bearish risk. So this results in what it is pretty long and crowded equals bearish. Okay. So when we're looking at this positioning, that is going to be a key attribute to look at, because what is the starting point? And again, if traders were buying in this range, this is how we get to the determination of this being a crowded long. That's a bearish risk. So going into the weekend, we actually knew that this was a possibility. So the question is not, is the headline bullish? But the better question is, what is the starting position and who already bought it? Right?
Right, exactly. And I
Um,
think something, Brian, that people don't understand is most traders are looking by the end of the week to have to not to go in the weekend with a position,
mhm.
to be net zero balance. And they try to do this almost every day. And so if they get a chance to take some money, take some profit, they will. Their
Yeah,
question is, what level of profit do I when I start taking the profit? So that's what they're doing. And the reverse is true. If they're in a loss situation, they want to take that loss as quickly as possible so it will be less.
yeah. Well, and we all know the battle hardened traders are really, they are so intense, but they also wear their position on their
I
sleeve,
mean,
and
that hurt my feelings at the time.
they get they get very injured.
And the and the algorithms, they don't care about your feelings.
Yeah.
So
And listen, I can make that joke because I'm kind of joking on myself, because I've traded energy commodities since the mid 1990s. So the thing is that looking at the positioning, then we look at this drop in two different lenses. If you just look right here, that looks like a straight bearish. However, if you look at it kind of a ebb and a flow, we've gone up. It's a modest correction, I think, and I think we head back up. But we are predicting the future. We don't know. We're not financial advisors. You can read all the disclaimers below, because this is not a recommendation to buy or sell any energy commodity, any stock, or any financial instrument.
and Brian, at this point, I think that bottom chart is very important too, on how many contracts were actually traded going down.
Yes, that's actually a good point. You can see that we've actually been building this position for some time. We built some last week, and so this is kind of some modest de-risking, I think. So
Right.
so but that is a trader thesis. And right now you can look and say, well, headline is bullish, expectations is bullish, positioning is bearish. And now what do the fundamentals say? Right? That is our next step, is looking. Now we leave the screen behind. This is where we look at the physical. And again, this is why we created Rogue Radar and Rogue Edge, to help develop this. So what we look at, and bear in mind, we still classify UAE in this OPEC data set. I know they are not in OPEC, but they've been, we haven't changed our data architecture yet. I still think of it as part of the same.
I think we start referring now to OPEC as the Gulf states, because that's basically what they are anyway.
That's actually a better terminology, because if you look at it, you got OPEC, which is Gulf states, and then you got OPEC plus over here, which includes Russia, Kazakhstan, Mexico, Oman. Well, Oman is in the Gulf. We probably ought to just divide it up that way. But let's take a look at the most recent month, which was released. This was July flows for this region, which includes Saudi Arabia, UAE, Iraq, Iran, Kuwait. Those are the key oil exporters through the Strait of Hormuz, and they delivered in July via production. This is not exports, production. So exports are kind of implied through the net of this number. You have 23 million barrels. Well, what does that mean? Versus last year, 32 million barrels, 32.6. 3-year average, 32.3. So that is down close to, what is that, 9 million barrels a day, right?
Right.
But let's not forget something. We mentioned it before, OPEC plus. And this is something I discovered this morning because I was looking at Rogue Radar. OPEC plus at 13.7 roughly. Guess what? That was last year 16, 3-year average 16.6. So we're down about 3 million barrels in OPEC plus. And where is most of that dropping? It's dropping in Russia. About 1.5 million barrels a day is dropped in Russia. And that is a key attribute. So is it fair to say the fundamentals are actually pretty bullish?
Right.
Right? And this is where we are short supply. Okay. Now we get back to the price confirmation. And again, when you're projecting what the future may hold, you got to bear in mind there's a high miss rate here. The best traders in the world get it right 51% of the time. What we're doing is stacking the odds in your favor so that you can actually build a thesis and actually defend it. Because I guarantee if you don't look at the headline, the expectations, the positioning, the fundamentals, this is where we spend most of our time is on the fundamentals. And then the price confirmation or the technicals, then you're going to miss it. You're not going to win, right, Bill?
Exactly. The big thing here to realize is that the really good traders get out of a loss fast, and also get out of a profit pretty quickly too.
Mm-hmm.
And they work on the percentages. They don't necessarily work on long-term trades. I think when I was doing most of that trading, they used to call it, you don't want to ever marry your trade.
Right.
You will lose money when you marry your trade.
Right. And it's part of the reason Bill and I talk often, and we have a lot of different thoughts. Sometimes they align, sometimes they don't. And people get confused because we can vehemently disagree with each other, and people, well, y'all don't like each other? No, we believe a certain thesis and we're defending that thesis. It has nothing, we are great friends. And so
and besides that,
I know a lot about sharks.
Yes, Bill knows a lot about sharks, and I mean, Bill knows a lot about sharks, but
he was the best at knowing what people wanted to hear and what people needed to hear.
Exactly.
We got to reference Tommy Boy. So when I evaluate this to me looks more like a pullback, and something Bill just pointed out live on this recording is that the low volume indicates that this is more likely trimming of positions. So
Right.
we've looked at the physicals. What is today's barrel check? The physical market looks tight, right? Not loose, meaning extra barrels floating around. Iranian exports may have some increased pressure with the sanctions. Gasoline and distillate inventories. Let's go ahead and pull out our rusty tool. This is like a Swiss Army knife. So we can look at gasoline stocks in the U.S. We're 11 million barrels further down and versus the 3-year average, and 14 versus last year. That is pretty bullish. That's close to 10% down, probably like 8%. Now distillates is 13 million barrels versus the 3-year average, and 10.4 versus last year. Both of those indicate that we have increased tightness, meaning that there is more demand. We've taken so much out of inventory that we're below a lot of historical averages.
And on top of that, if you take a look at the refining inputs, we are at record refining inputs right now. And so even with the record refining inputs, we're seeing gasoline and distillate inventories remain pretty tight.
Yeah. So the physical market looks tight. Iranian exports remain under pressure. Gasoline and distillate inventories also remain tight. Middle East production has not, I wouldn't even say fully here, normalized. We are probably 7 months at best from getting partial recovery, and that's if we have full peace today. So refining Russian. What?
You need to refine English first.
Well, clearly, Russian refining is impaired. Yeah. So anybody in Russia, I apologize. We do have global customers, so our customers in Russia, I apologize. Cushing still matters. And that gets back to what Bill was talking about, which is let's take a look at Cushing stocks. And this is what Bill was talking about. We are 21 million barrels in Cushing storage, which is about 6 million barrels off the 3-year average. So the screen moved fast. The barrels are going to move slower. What this means is this is more likely financial positioning than anything fundamentally shifting. So the technical confirmation, this is where I get back to, we have particular levels that we track, and also inside of Rogue Radar. And again, this is our tool. We actually identify the price levels that we are looking at, so that you have a cheat code so that you can go to your chart and you can say, oh, wait, we haven't gotten to this 81.29. We're kind of hovering around here, but we've got this 85.94. So where do we go from here? If 81.29, where does it go from there? Likely 76.26. So we identify all of that inside of Rogue Radar. So what is the key lesson? What do we take away from this, Bill?
I think that the thing is that the headlines can move in an opposite way that the fundamentals are telling you. And so it's important to not just look at the headlines.
Right.
Because that's just going to give you a talking point. And Brian, I try not to give you talking points. We try to give you what's going on in the market in all various aspects of the market, so that you will be able to make an informed decision, not a influenced decision.
I mean, essentially, if you trade on headlines, you're almost guaranteed to lose money.
Yeah.
If you move just on headlines, this process, which again we cover in the Rogue method, which is totally free down below, is we look at a headline, we look at the expectations, we look at the positioning, then we look at the fundamentals, and then we look back at the chart at the price confirmation. This is how traders separate noise from signal. It's not about the noise of the headline. Many times people oversimplify it. well, it's this headline means it's going to be bullish. This headline means it's going to be bearish. You have to figure out where you were starting from, which again,
Right.
key for us was identifying this down here on commitment of traders, that we were
Right.
entering the week on a crowded long, which is a bearish risk. So that's my thesis. Could be right, could be wrong, but that is my thesis. And if you take the energy markets seriously, there is a link down below for a 14-day free trial to Rogue Radar. And so you can get access to that, and it updates every 30 minutes on the technicals, and it updates every day on my opinion. It is weekly data or monthly data, depending on which data set, because OPEC releases monthly, EIA, some of it is weekly, some of it is monthly. So
Right.
once you get inside, you'll see what that is. But it's a 14-day free trial. If you take energy markets seriously, you need to follow this process. Well, you don't need to do anything. This is a process that has been repeatable by successful traders, successful hedgers, and successful companies on the refining side of the industry and the producer side of the industry to help put their companies in a better position. If you want to learn a little bit more about that, sign up for the free Rogue method down below, or give us a 14-day free trial. So parting words of wisdom, Bill.
Today, we're going to do a little bit of trivia.
Ooh.
Most people don't realize the one newspaper in the country that was known for its headlines was the Washington Post. And one of the Washington Post's most famous headline was this: headless body found in topless bar. I'm telling you, when you read a head like that, is that bullish or bearish? I don't know. But don't pay attention to the headlines unless you got something to back it up. They should be sort of your last thing that says, okay, that's confirmation.
Well, and if this is your first time here, this is Bill. This is Bill. No, wait. Yeah, that way.
Yeah.
That way. Okay, that's Bill. I'm Brian, and we're with Energy Rogue. We look at energy markets and we try and have a little fun along the way. And often, Bill, this is actually from one of our previous episodes, because he really likes talking about it.
I was in a French fry commercial when I was a kid.
Yeah.
Yes. Yeah.
So Bill was in a French fry commercial, and so anyhow, we're Bill and Brian with Energy Rogue. Thanks so much for spending some time with us, and hopefully this gives you a structure. If you want to get a little deeper, it's how many pages is the Rogue method? 40? Is it like?
Yeah, I think so.
I think it's like 40 pages or something like that. We've wrote it based
You
upon
can do it over lunch.
markets. Yeah, and after you get the Rogue method, there is a companion webinar if you want to spend a little time and actually get a little bit deeper on it, because this is a repeatable structure that gives people success when looking at energy markets, because it is an incredibly volatile industry and a very volatile commodity when you're talking WTI, Brent, Henry Hub for natural gas, propane, natural gas liquids, refined products, all of it. So listen, thanks so much for joining us. Any last words of wisdom, Bill?
Well, guys, just watch out for those headlines.
Yeah. All right, folks, we will see you next week.